Hello, my name is Ko Fujimoto. This is CDH's CrossBorder channel, the YouTube channel. Today I'm going to talk about US taxation cross-border gifting. What is the best practice for receiving gifts from overseas? So let's get started. You have someone who is not living in the United States, who is not a green card holder, who is not a citizen, your mother, father, brother, and sisters living in foreign countries. This person is kind enough to give you a gift. What type of gifts that you can get? First one can be a cash, right? Cash, the best thing. And then stock or mutual funds. And the real estate, it can be obviously can be other shapes, but today I am going to talk about these three types of assets that you may be able to receive from a U.S. non-resident, people who are not living in the United States. So you are currently living in the States, and you don't want to pay U.S. gift tax 18% to 40% tax rate. So this is today's topic. I hope you enjoy it. Okay, so let's get started with the cash first. So your friend or your parents have a cash in a bank account. Okay, cash in a bank account. I think nowadays not too many people keep the cash at house. So let's assume that someone overseas have a cash in bank account. Okay, if the cash is held in a bank account and the bank account is in the US, right? Let's say my sister who lives in Japan has a bank account in the Chase Bank in Chicago. So in that case, she has a cash in a bank account held in the US. If that is the case, if she wants to give that to me, this cash or this giving is subject to the US gift tax. However, if my sister has a cash in a bank account, let's say the bank of there are many banks, let's say the Mizuho Bank in Japan, she has a balance there, she wants to give that to me. Okay. If that is the case, this giving is not subject to the US gift tax. However, you, in this case me, may need to report to the IRS for the fact that I received a gift. It depends on the amount that I received during the year. But you see the difference here? You see the difference? Cash held in the US versus cash held in overseas. There is a different treatment about the gift tax. So, you know what to do, right? You know what to do. You tell, let's say my sister has bank account in Chase in Chicago and bank account in Mizuho in Tokyo. I would tell my sister, don't give me the cash in Chase. Give me the cash in Mizuho. Either, send it to my account in Tokyo, which getting very difficult now because I am a non-resident of Japan. But let's say if it's possible, okay, just transfer the money from your account to my account in Japan. Or ask my sister to wire the fund to my account in US, which is still not subject to the US gift tax because the cash that was given was held in Japan, not in the United States. You see the point? So, the key point is, number one, the best practice is receive cash kept overseas at your overseas account. So don't bring the cash into the United States. You don't want to have that gifting subject to the US gift tax. Or receive cash kept by the donor, kept overseas to your account in the US from the Mizuho to Chase, my account. That's okay. Never ever receive cash held in the United States. I should not receive cash. My sister's cash held in the Chase Bank in Chicago because the cash is held in the United States. So I hope you get the point. All right, so let's move to the next category, which is stock or mutual funds. Stocks, mutual funds, and any other similar investment products are intangible asset. Mr. Fujimoto, what is the intangible asset? I have never heard of such a word. It's very common because intangible, normal person don't have to use that word. So the intangible asset meaning not having a physical presence or shape, right? So it's written on a paper. They are called intangible asset. So now in this video, I don't want you to understand the purpose of this video is not to teach you what is the intangible asset is. The purpose is the gift tax consequence for stock or mutual funds. So but it's important. It's important. It's related. That's why I said it in here. But so stock or mutual fund, it's not subject to a U.S. gift tax. Now the reason for that is these are intangible assets. Okay, these are intangible assets. Now, similar to cash, you may need to report the fact that you received the gift from overseas, a non-resident. Okay, depending on the amount. But I think the key point in this slide is stocks and the mutual funds are intangible assets, and intangible assets are not subject to the U.S. gift taxes. Non-resident can gift them without triggering the U.S. gift taxes. So that means if my sister in Japan has a brokerage account at Vanguard, I have to use some name, right? So please allow me. I'm just picking random name here. Or maybe I should use the A Securities or A Investment Bank. But anyway, so let's say my sister, who is a U.S. non-resident, has a security account in the U.S. and has stocks and mutual funds. She can give it to me because stocks and mutual funds are intangible asset, do not trigger U.S. gift taxes. You got that? Very strong contrast between cash and stock and mutual funds. Okay, let's get to the last point here, which is a real estate house. My sister has a house in Chicago. So real estate's case is, it's very similar to cash. If the real estate is located in the US, if her house is in Chicago or anywhere in the United States, is subject to the US gift taxes. Okay? If her house is located outside of the US, this gifting is not subject to US gift tax. Again, it's the same thing. You may need to report to the IRS. The form is called Form 3520. The amount, I'll tell you the amount now. Amount is $100,000 a year combined. 1 year, $100,000. If you miss it, I think the penalty is 5% per month, and maximum penalty is 25%, and that's a big problem. It's a big issue right now. But anyway, that's a different topic that I am going to talk about at some point of time. But if the real estate is in the US, do not change the title without considering the effect of gift tax. And this is additional point that I want to stress here, because hey, I have a house. My sister say I have a house in Chicago. I can put my brother's name to the house as a joint ownership, joint tenancy. Then that really means that she gave me a 50% of the house's value to me. So that means she owes gift tax to the United States. So I think a real estate is similar to cash, right? Similar to cash, located in the US or located outside of the United States. The difference is she cannot just send the house in Japan or in India or in UK, send it to me. She can't do that because it's not movable, right? Real estate is there, stays. So that is the difference between cash and real estate. But the common theme here, the cash has a shape, real estate has a shape. It's a tangible. I use another professional or technical term, tangible, that has a shape. Located in the United States. If so, it's subject to the U.S. gift taxes. Okay? So that's all today. The gift and the inheritance tax area is this is very complex area. Today, I want to stress one more time. Today I talked about a specific case. U.S. non-resident gives a gift to you who is a U.S. resident. Okay? The things that I described here today only applies to that particular case. Let's say my sister is a U.S. citizen, then that's a completely different story. Okay? If my sister is a green card holder who goes back and forth between U.S. and Japan, that's another different story. Today I didn't talk about annual gift exemption amount either. I am going to talk about it at some other time. Okay. So there are a lot of cautions here. The final caution, this is our disclaimer. Obviously, I put the information in a super simplistic way, and you should not just act based on this video. You should always talk to the professionals, the tax return preparer or attorneys and trust and estate attorneys and so forth, and then pay the fee to get right advice. Okay. So I'm disclaiming my responsibility and our firm's responsibilities here. The CDH has a cross-border family practice, and we are trying to trying to bring the support to the foreigners who lives in the United States, or American citizens who live in the foreign countries. So anyone who has to deal with two countries' tax systems, I call them cross-border family or cross-border professional. So we're always looking for new team members who are interested in this very narrow but highly specialized practice area. And we publish the book on Amazon. This happens to be in Japanese, but we will publish the book in a different language this year. So that's all today, and I hope you enjoyed my video. Thank you very much. Have a great day.